Hi, everyone. Welcome to another episode of Tax Talk Unfiltered here at Gelt. I am your host, Spencer Carroll, CPA, and I am once again joined
Sorry.
by Rachel Richards, CPA, on our product team. She's laughing because we had to redo the intro, but I think I did just as well the second time around. So we're in good shape. And today's episode, we are talking about extensions and the extension trap. Depending on how you look at it, it can be a little bit confusing for clients, especially if you're not used to an extension. It can feel like a bad thing or a scary thing, but Rachel's going to help us understand it better and how to use it wisely, because it can be a tool in your tax arsenal. And even once you file the extension, we're still thinking about your 2025, and Rachel's going to talk about how you're still in 2026 and there's some juggling that you have to do between the 2 years, which can make it tricky as well. But we want to demystify that in this episode. So I want to start at the basics. And Rachel, what I want to ask you first is, can you just give us the baseline? What does filing an extension actually mean and do for the client with their taxes?
Yeah, so filing an extension is just as it sounds. It's an extension of time to file. Some common things that we run into is it's a common misperception that an extension is a red flag for the IRS, or if you file an extension, you might be audited. But that's simply not true. The IRS offers an extension because they understand not everyone is going to have all of their information ready by that April 15th deadline. And so you do get that automatic penalty free 6 months to file. But because it's penalty free for 6 months, that doesn't mean that all of your penalties are paused. It only applies to the failure to file penalty. So it's only an extension of time to file. It is not an extension of time to pay. And the reason the IRS is so generous with this extension is because they're still expecting you to pay everything that you owe them by April 15th. So the extension gives you until October 15th to file, but the reason that you still want to put planning into the extension process and get as accurate as you can when making an extension payment is so that you don't have any failure to pay penalties or interest, because both of those will accrue until the tax that you owe is ultimately paid.
A client listening that might hear, we're going to give you an extension to file because we know that you don't have all your information handy, but at the same time, we expect you to be 100% accurate on your final tax liability and make that payment. Could that feel like a mismatch of the IRS acknowledging that you may not have everything, but they want you to pay everything?
If you ask the IRS, that's why they would want you to be a little bit conservative with your extension. When you file your tax return, you're ultimately going to get to that final number of exactly what you owe. But when you're filing an extension, just like when you're making an estimated tax payment, we tend to be a little bit more conservative with what we'll recommend that you pay, just to make sure that we're covered in case your situation changes and that final number is going to be a little different than you thought. Because if we had absolutely everything, then you wouldn't need an extension. You would just file your tax return.
Hmm.
So that's why at extension time, we might be a little bit, if you think you might make $3,000 of income, we might call that five and run the numbers based on a little bit of a buffer, just to make sure you have enough paid in so that you're not penalized. If penalties are important to you, which is a whole other area that we could get into on whether it could be worth it to have that underpayment penalty and maybe keep your liquidity a little bit longer.
Yeah. What are the extension deadlines for people and their businesses?
So for individuals, your extension deadline is going to be April 15th for the IRS. Most states are also April 15th, but some are, as late as May 15th. But April 15th is going to be your primary deadline there. And then for businesses, if they're taxed as an S Corp or partnership, your extension deadline was March 15th. And for C corporations, you're also April 15th. There is an exception if you're out of the country on April 15th, you do have an extra 2 months to file an extension. So you have until June 15th.
Okay. I didn't realize that some states followed a different deadline schedule.
Yeah, some are on April 20th, some are on May 15th. Some states you get an extension until November. Everyone has their own rules, which makes it fun.
Yeah, there's not enough dates for people to keep track of, so might as well throw a few more in the mix. Okay, so we know what it is. We know when you need to make the extension filing. We hear the term safe harbor thrown around with payments. Can you tell us, does the is it related at all to extensions? Are people safe if they make the safe harbor payment?
Yeah, so safe harbor is usually a term that's associated with estimates because if you filed an extension, you're in this limbo until you file your tax return where you're actively working on last year's taxes. So you're filing your 2025 tax return, but you also might be obligated to pay 2026 estimates at the same time. So with your estimates, because the IRS is so generous, they give you these safe harbor options because they recognize that, hey, you might not have 100% of your tax calculated at any point in time. We'll give you some parameters that if you fall within them, we won't penalize you. So when it comes to safe harbor estimates, it's the lower of two numbers. So the first number is going to be 100 or 100%, 110% of your prior year tax. And that's based on last year's tax liability, which would be in this year, your 2025 tax liability, or 90% of this year's tax, so your 2026 tax liability. Because we're midway through the year, you haven't filed your tax return, you may not know both of those numbers for sure. Until you filed your 2025 tax return, your 2026 estimates also could be at risk of you not knowing the exact safe harbor amount that you're going to pay. But that's actually why we have some tools in our tool belt at Gelt where we can apply the payments in different ways to give you a little bit of insurance. So if the safe harbor numbers change unexpectedly, we can make those payments in different ways so that you don't get subject to those underpayment penalties.
Got it. Two different things for people to keep in mind. And for the extension, you need to make 100% of your liability, not a safe harbor amount that gives you more time to catch that back up. And so, what happens if you don't file an extension, but you also don't file on time?
Yeah, so if it's your first time filing late without an extension, and your first time means it's the first time you've done it in the last 3 years, you can request first time abatement from the IRS. And most of the time, they will waive any penalties as long as you have that clean 3 year history. If you're a repeat offender, then if you didn't file an extension, every month that your return is going to go unfiled, you're going to be subject to a failure to file penalty. And then on top of that, if you have tax due, you'll also be subject to a failure to pay penalty and interest. And so those will accrue each month until your tax return is filed and the tax is paid in full.
Got it. Even if you're not in a place where you can calculate your final liability, it would still be your recommendation to at least file a zero extension because then you're at least avoiding that failure to file penalty.
Absolutely.
Okay.
Absolutely. A zero extension is much better than no extension at all.
And you can't file an extension late, to my knowledge, right? Once April 15th is done, you can't do it on April 18th.
You cannot. There have been a few times, I know a few years ago, the IRS website went down on April 15th. And so they did give you a couple extra days. But unless you're in a situation like that, you can't file an extension after the deadline.
Okay, got it. Yeah,
But
so
you can still make a payment. And as soon as you make that payment, you'll stop accruing any failure to pay penalties or interest. So you can continue to make payments up until you file at any time. The IRS will always take your money.
okay, got it. Yeah, they're good at that, taking the money part. Yeah, I asked that because I've had some client calls in the last month or so where someone has a partnership or an S corp and it's March 23rd, let's say. And so I asked them, "Oh, okay, you filed your S corp extension, right?" And then a blank look goes over their face and they're like, "I don't know," or "No." And that's a problem. That's not where you want to be, but make the payment and try to get your return done as quickly as possible so that you can avoid as much penalty as possible.
Yeah. And if you don't owe any tax, so if you have all of your tax paid on time, if you're filing individually and you didn't file an extension, as long as you've made all of the payments, you're actually okay. Technically, you don't need the extension, but it's always best practice just to file an extension, even if it's a zero, so that if something changes, you're definitely covered.
Okay. So this is going on a rabbit trail here, but theoretically, if someone has always paid in, let's say through their W-2 job, they've either withheld perfectly or over withheld, they don't need to file a tax return. The IRS doesn't necessarily care because they've received all of the tax revenue from that person.
You still need to file a tax return because the IRS wants to confirm that you've paid everything in. So you always still need to file, but if you don't owe anything and you've overpaid or paid perfectly, the extension becomes less important. But it's free, it's easy, why not just file it?
Yeah, that's true. And the chances of you getting it 100% perfect are very slim. And if the IRS isn't coming after you, it might be because they owe you a refund. So you might as well file
Yeah.
so you can get that money back. Okay, changing gears a little bit. Let's say that a client has filed their 2025 extensions as they should. Is it now just sit back and wait for your CPA to do it or for yourself to have more time to do it yourself? Or are there opportunities that clients should be thinking about and the extra time that they've given themselves gives them more opportunity to act on it?
Yeah. Once you have that extension, a natural reaction is, okay, I've done my part. Let me sit back for the next 6 months. But don't do that because this is, you were given this extra 6 months. Use that time wisely. So, this is an opportunity to really iron down exactly what you're going to owe for 2025. Make sure you're taking advantage of every opportunity available. One thing that's cool for people who do file an extension is in the middle of May, the IRS will release something called your wage and income transcript. And so you can go online and download a copy of all of the tax forms that the IRS received for you during 2025. And you can compare that to your tax return to make sure everything that the IRS has, you've reported. That'll help avoid any notices down the line that get automatically triggered. Really go through, make sure you're optimizing your business tax returns, make sure you're taking advantage of all those deductions. There's a credit you may qualify for. Take the time to give the information to get the benefit from those credits. And that's what you should be using your extension time for, really making sure that you're getting the most out of your tax return because that's going to help you this year. And then it's also going to lay the path for planning for 2026 as well, because all of the good habits that you establish with your 2025 return, you can roll into 2026 and be better positioned for the upcoming year.
Yeah. And I know that there's still some things that you can do, of course, maybe to avoid the scramble and when your CPA is the busiest during tax season. giving yourself more time to look at your books or expenses that you might have incurred in 2025 that you could write off as a business expense. Some retirement contributions I know you're still eligible to make, at least on the employer side if you're a business owner, but on the personal side, you could still make IRA contributions as well, and HSA, I believe. Correct me if I'm wrong, Rachel. And then what about, let's say you placed a piece of real estate in service in 2025, but you haven't done the cost seg yet. Can you still do a cost segregation study in, say, the summer of 2026? And since it was placed in service in 25, you still get the depreciation losses?
Yeah, just to go back for a second, on the HSA, you aren't able to make HSA contributions after April 15th for 2025, but you can make them for 2026. Retirement contributions, depending on what kind of retirement contribution, you may still have an opportunity to make contributions during that extension time. And then for cost seg studies, you can do the study in 2026 and then apply that benefit to when you placed it in service in 2025. Absolutely.
Okay. There's still planning and strategy opportunities for 2025, even though we're in 2026 and the
Yeah.
extension.
I mean, you could even at this point in time, potentially, if you have an LLC, you could still make an S election for 2025 and file as an S Corp. You would be late if you didn't file that S Corp extension, but it would be your first time. You'd most likely get out of that penalty. But even some entity structuring opportunities are still available at this point in time.
Okay.
And the beauty about that is you can, when you make those decisions, you'll know exactly what the benefit's going to be because 2025 is closed. Your P&L is not going to change. So you have the opportunity of 2020 hindsight there.
Yeah. Another good reason to have good bookkeeping so that you don't have to also try to clean that up retroactively. Can we expand a little bit on the entity restructuring? Because I've had this come up on calls where clients thought they were an S Corp, but actually weren't. Once I reviewed their return, their prior years had been filed as a Schedule C, or those that know they're not an S Corp, but wish they would have made the election and they do already have the LLC in place. So you've already told us you can make the retroactive election. How does that client handle the reasonable W-2 payroll for 2025?
So you have some options. One option is to run a late payroll. It would be late. There are potentially penalties that you would be subject to, but assuming that payroll would have only applied in Q4, again, you are likely to get a first time abatement on that compensation. And then depending on your situation, sometimes you could potentially pay yourself as a 1099. You are paying the same payroll taxes, but most of the time going the payroll route is going to be the best way because you do want to have that reasonable compensation.
Got it. Okay. So you can still file payroll late, but there could be penalties. You could try to get them forgiven, or you could almost treat the equivalent of your W 2 as like a Schedule C with no expenses deducted. And so it flows through to the Schedule SE, and you pay the Social Security and Medicare as you should.
Yeah.
Okay. Got it. Yeah, that does come up quite often. So it's nice to know that they still have that opportunity should they want to pursue it.
Yeah. It's obviously not ideal, but there are options available. It's not going to, if you had done it even in December, it would have been a lot easier to do. There would be less unknowns, less potential for penalties. But if you're in a situation where it's really advantageous, the door's not completely closed.
Okay. Rachel, if you had to define a client profile, who needs to file an extension or should file an extension in your mind from a strategic point of view?
Obviously, if you're waiting on K1s and you have information that's going to affect your return that isn't available yet, you have to file an extension because you truly don't have all of your information yet. If you can also potentially use an extension as a strategic move. I mentioned a little bit that if your 2026 income is unclear or fluctuating, when you're thinking about those safe harbor estimates, You can use the time to file 2025 to do some simultaneous planning and get really creative with how you're making your payments to potentially minimize any underpayment penalties you'll have in 2026. And I think that's probably a different topic that we could have a whole other conversation about. But if you have really fluctuating income, your situation's changing a lot, and you just need more time to focus and make sure that everything's done right, that you've taken advantage of all the opportunities available, an extension's really perfect for you because you can have that focus time. You're not scrambling. You're not competing for time with all of the other people who are trying to get everything in by April 15th. It's really a luxury to be able to go through things and make sure all your questions are answered and feel really confident about your return before you hit that submit button.
Yeah. On the flip side, who shouldn't file an extension, in your opinion?
If your situation is simple, you're expecting a refund, why wait?
Yeah. Yeah. That's my thought is pretty much only if you're certain you're going to get a refund would I be really trying to file on time. But pretty much anybody else, you have to make the payment by April 15th. So everyone should plan for that. But then if you get the extension, as we've discussed, there's still tens of thousands of dollars in potential strategy opportunities. Why limit the amount of time you have to explore those? And I've always heard that filing and then filing an amendment, the processing time for the IRS to process your amendment is a lot longer than they would process your initial return, and you're getting a red flag.
It's not necessarily a red flag, but the timing can be painful. Sometimes it's up to 16 weeks before the IRS will even look at your amended return. So it's much, much better to file your return right the first time than to file something hastily and then need to go amend it later.
Yeah. This has been great. Any final words from you that I haven't asked you about that you think someone should know about extensions, pros and cons?
No, I think we've covered it.
Okay. Thank you, Rachel, as always, for joining and sharing your wisdom with us. Thank you for listening, everybody. If you take one thing away from this, it's that an extension should not be looked at negatively or like it's scary. It's a tool. The IRS gives it to you. So take advantage. Give yourself more time. There's still strategy opportunities out there for you. If you feel like your CPA is not helping you think strategically about your taxes, you might be leaving money on the table. Maybe you've done it yourself. You think you're leaving money on the table. It is not too late. Even after April 15th, it is not too late. You can work with somebody else who helps you think about these things and not overpay, which is what we want you to do, not overpay on your taxes. So thanks everyone for listening to another episode of Tax Talk Unfiltered, and we look forward to the next one.